market sounds like a complicated place where people speak in numbers and throw around big words. You're not alone. But don't worry, we're going to break it down in simple terms so you can understand what it's all about and why it's so important. So what exactly is the stock market? Well, think of it as a giant marketplace, but instead of buying and selling physical products, people are buying and selling stocks. A stock represents a small part or share of ownership in the company. For example, take one of your favorite companies. It could be for literally anything. If you buy a stock in that company, it's like owning a small piece of it. You become what's called a shareholder. The idea behind the stock market is pretty simple. Companies need money to grow, and they can get that money by selling pieces of ownership or stocks to investors. In return, if the company does well, the value of the stock could go up, and you could sell it for more than what you bought it for, making it a profit. That's why people invest in the first place. They're looking to potentially grow their money over time. The stock market isn't just one place. It's more of like a network of exchanges. In the United States, the most famous ones are the New York Stock Exchange, or NYSE, and the National Association of Securities Dealers Automated Quotation, or the NASDAQ. These are places where the buying and selling just happen, completely run by people and computers. Stocks go up and down in value all the time. This happens because the stock market is influenced by certain factors like how well the company is doing, what's going on in the economy, and even people's emotions. One important thing to remember about the stock market is it isn't about getting rich overnight. It takes time, patience, and a little bit of knowledge. Some people make a lot of money and others lose. But over the long term, the market has historically grown in value. It's all about understanding the risks and making smart decisions. Now that you understand the basics, let's turn over to the daily news.
Good evening and welcome to your daily news. I'm Max Menikis, bringing you the latest updates in the financial world. Tonight we're diving into the stock market's recent fluctuations and examining how the recent election has played a role in shaping investor sentiment. The stock market has experienced a roller coaster ride in the days following the election, with investors reacting swiftly to the outcome. On one hand, we saw significant gains in sectors that tend to benefit from stable political environment, while other sectors have showed volatility as uncertainties loom. As we look at the major indices, the Dow Jones Industrial Average surged by over 300 points immediately after the election results were announced, signaling investor optimism. The S&P 500 and NASDAQ followed suit, buoyed by expectations of pro-business policies and political infrastructure spending. This surge reflects a broader sentiment that stability in government can lead to economic growth. However, it's important to note that not all sectors reacted positively. The tech sector, which typically thrives under certain regulatory environments, faced headwinds as concerns about potential regulatory changes emerged. As we've seen in previous elections, the tech industry often experiences fluctuations based on anticipated policy shifts. Now, let's break down some key sectors affected by the election results. Energy stocks, for instance, saw a noticeable uptick, with crude oil prices rising sharply as investors anticipated increased demand following the election. Meanwhile, renewable energy stocks have also gained traction, reflecting a shift towards sustainable energy initiatives that many voters prioritized during the campaign. On the flip side, financial stocks initially soared but have moderated as investors assess how interest rates might be influenced by the new administration's policies. Banks typically thrive in a rising interest rate environment, but uncertainty around regulatory frameworks may dampen those gains in the short term. Moreover, small cap stocks, which often mirror domestic economic conditions more closely, have performed particularly well, signaling optimism about local business growth and consumer spending. This trend suggests that investors are betting on robust recovery in the post-election landscape. As we continue to monitor these developments, market analysts are urging caution. Many are advising investors to keep an eye on upcoming economic indicators, including job reports and inflation data, which could further influence market sentiment in the coming weeks. In conclusion, while election has brought about a wave of optimism in certain sectors, it has also introduced a degree of uncertainty that investors will need to navigate carefully. As always, we recommend staying informed and considering your investment strategies in light of these ongoing developments. Now, we will go to our beloved field recorder, Keegan McClure.
Good evening. I'm Keegan McClure reporting to you live from down East Maine. We've just heard from our studio anchors about the stock market's movements post-election. Now let's take a closer look at how everyday investors are reacting to these changes. While large institutions and analysts monitor the broad indices, it's the individual investors who are often most impacted by daily fluctuations. We spoke with some local experts and average investors to gain insight into how they are approaching the market during these volatile times. We are here with Chad, a local investor who's been following the market closely. Chad, thank you for joining us. With all the uncertainty in the market, how are you personally reacting to the election results?
Well, thank you for having me. Honestly, it's been a bit of a roller coaster. Just moments after the election, I saw my portfolio bounce around quite a bit. I've been keeping an eye on sectors like energy, which really surged, especially with oil prices going up. I'm cautiously optimistic, but try not to panic if things dip. I'm in it for the long game.
I think that's a great perspective. Tell me more about what you mean when you say long game. Does that mean you're looking to hold through the volatility, or are you more focused on timing the market?
For me, it's about staying in and letting the market do its thing. Of course, I'm paying attention to sectors that are showing promise, like renewable energy, but I'm not rushing to buy or sell based on short-term fluctuations. It's been about making smart decisions and diversifying.
As we just heard, for many investors, staying patient and diversified seems to be the strategy that is most popular. The stock market's reaction to the election results really show just how sensitive the market is in political events, sector performance, and investor sentiment. Whether you're a seasoned investor or just starting out, understanding the broader economic factors along with careful research and strategic decisions will be key in navigating this volatile market. That's all from me for now. Be sure to stay tuned as we continue to track these developments. I'm Keegan McClure, reporting to you live from down East Maine. Back to you in the studio.